equity and the beauty of the network is it gets exponentially harder to acquire Bitcoin over time, and that's what makes the network secure and stable, and that's a good thing for all of us.
Michael Saylor dives into banks, Fed rates, and why he believes Bitcoin is the ultimate asset. We'll explore his bold views and strategy. Let's hear what the Bitcoin maximalist has to say.
Bitcoin has matured over 4 years, and that's a good thing. We used to have extremely highly levered, poorly capitalized companies driving the market, like the offshore exchange like FTX and Three Arrows and Terra Luna and the like. And the market has matured such that now you have large pools of more permanent capital like BlackRock's capital, IBIT or Fidelity or Wall Street. And that will create less volatility, lower drawdowns, but it will drive the price up. And on the other hand, it's kind of like saying, your family came to Manhattan in 1700 and you bought up a bunch of land, and then you went back to Europe and you told everybody that Manhattan's going to be the greatest seaport in North America. And here we are in 1800, Michael, and your family owns like 47 blocks of Manhattan, but the prices of Manhattan real estate have gone up by a factor of 20. Isn't it getting it harder for you to do business in Manhattan? And the answer is, well, the price is going up, but there's a lot of other people that are in Manhattan that do things that we can't do. And I'd much rather have other businesses and other pools of capital, like on the day that Apple and Microsoft and Google enter the Bitcoin ecosystem, the price will go up, but the risk will go down. And one of the interesting things about volatility is, like, if you look at the risk in the space, if you have something which is 10x over collateralized by Bitcoin and the volatility is 60, well, there's a risk. And one way to drive down the risk is to increase the collateral, but the other way to drive down the risk is decrease the volatility. So it turns out you're better off being like 3 times over collateralized with an asset with a 30 vol than 10 times over collateralized with an asset that's a 70 vol. And so I think that's what's happening now. The industry is growing up. It's becoming more secure. It will be accepted by banks. It will. I'll leave it at this thought, which is, when your bank tells you they'll buy Bitcoin for you and they'll make it really easy, and you can do it on the phone, it'll cost you $1 million Bitcoin. And when your bank calls you on the phone and says, you really ought to buy Bitcoin, it's a digital monetary alternative, and when they recommend it, it'll cost you $10 million of Bitcoin. And right now, no bank's going to recommend it, and they're not going to help you buy it, and you're going to have to jump through hoops, and you're going to feel really nervous about it, but you'll get to buy it around 100,000 or a little bit less than 100,000 of Bitcoin. And I think they're all three the same risk-reward proposition, and I bought it at 10,000. I'm buying it in billions of dollars of quantity at 100,000. I'll be buying it at $1 million. I'll be buying it at 10 million. And if you're back here interviewing me when it's 10 million a coin, and you're going to say, Michael, it all worked out, but Bitcoin's 1,000 times more expensive, and don't you feel bad that you convinced all these people to buy Bitcoin at 10 million a coin? I'm going to say, well, Bonnie, the entire ecosystem is much less risky now, and it's still the best investment option. I think it's still better than buying the S&P index. It's still better than buying a warehouse in Siberia. I'm going to keep buying it. It's just like buying Manhattan real estate in the year 2025 when your family started buying Manhattan real estate in the year 1700.
Michael Saylor recently made headlines by calling Warren Buffett's Berkshire Hathaway the Bitcoin of the 20th century. The comment came on the same day Buffett, now 94, announced he will step down as CEO by the end of the year, passing leadership to Greg Abel. Buffett has built Berkshire into a $1.1 trillion investment empire with a 20% annual return over nearly 6 decades, a performance Saylor sees as a legacy of unmatched value creation, much like what Bitcoin represents in today's digital age. Despite Buffett's long-standing criticism of Bitcoin, calling it rat poison squared, his company holds indirect exposure to the crypto world. Berkshire has invested in Bank of America, New Holdings, and Jefferies, all with ties to Bitcoin-related products and services. While Buffett warns against collapsing currencies and hints at diversifying into other assets, his firm's quiet embrace of Bitcoin-linked companies speaks volumes. As one legend exits the stage, a new financial era powered by digital assets may be unfolding.
Yeah, so BMAX is an ETF that launched about a week ago. And there's a whole one of the great use cases of Bitcoin is to put it in the middle of the capital structure of a publicly traded company. And if you have a publicly traded company, it causes your equity to be very volatile. So like my company's the most volatile equity out of the S&P 500 universe. Sometimes a volatility of 90 to 100. Well, when the volatility of a public company gets above 45, you can sell convertible bonds because convertible arbitrageurs actually are able to sell that volatility or extract it, and that pays the cost of the interest.
What would really happen if the world finally learned who Satoshi Nakamoto is? Edward Farina, CEO of Alpha Lions Academy, sparked the debate with a dramatic post on social media. He shared an image showing a sharp Bitcoin crash and a soaring XRP rally, all triggered by a hooded figure labeled Satoshi's Identity Revealed. The visual suggests that unmasking Bitcoin's mysterious founder could cause panic and shift investor confidence toward XRP. Farina's message assumes that revealing Satoshi's identity might shake Bitcoin's foundation. Concerns could arise about centralized control, legal vulnerabilities, or even ties to controversial institutions. In contrast, XRP is portrayed as the compliant, utility-focused option, ready to take the spotlight. This reflects Farina's pro-XRP stance and skepticism toward Bitcoin's origin story. Reactions across the crypto community were mixed. Some users believe Bitcoin's influence is too strong for XRP to benefit from its downfall, warning that the entire market could suffer. Others argue that the mystery around Satoshi no longer holds much power, and that such speculation has come and gone without real impact. While Farina's post doesn't reveal anything new, it stirs up a long-standing debate in crypto. How much does Bitcoin's origin really matter? For some, it's still a critical issue. For others, the tech and adoption are what truly count. Either way, the mystery continues to capture attention and spark big questions about the future of digital assets. That's all for today's video. Until next time.